If current E&P is positive and accumulated E&P is positive, then any distributions that are made during the period are first going to come out of current E&P, and then if there's anything left over, we're going to look to accumulated E&P. Okay, so let's say that we had a scenario where current E&P happened to be $80,000, and then accumulated E&P, let's say, is $150,000. And then let's say we have two distributions during the period. We have distribution 1 is $30,000. And then we have distribution 2, a second distribution to a different shareholder of $10,000. Now, in this case, we say, okay, we've got $40,000 here of distributions, and there's $80,000 of current E&P. So both of these distributions are going to come out of current E&P because they're less than current E&P. We're not even going to look back to accumulated E&P in this scenario. We've got plenty of current E&P. So both of these distributions are going to be deemed to be a dividend to the shareholders. Okay. But what if we have a scenario where we have multiple distributions like this, but they exceed current E&P? For example, instead of this being $30,000 right here, let's say it's $130,000. So we got $130,000. So now we have $140,000 in distributions, and that is higher than our amount of current E&P. In that case, what we're going to have to do is we're going to have to allocate E&P to the distributions. So here's how we're going to do this. We're going to use this formula. Okay, so I'd write this down. Current E&P, now we're looking at a particular shareholder and their distribution. We're going to multiply current E&P by the amount of distribution that shareholder received divided by the total distributions during the period. Okay, and then that is going to be the amount of current E&P that gets allocated to that distribution. I know this is a lot. I don't expect you to know it just after seeing that formula. We're going to work through an example, and we're going to come back to that formula. So just write that down. Then after we have allocated current E&P to the different distributions during the period, so let's say we start with the first distribution because we're going to do it in chronological order. So we basically go and say, okay, how much to the current E&P that was allocated to that distribution. Then next we go to accumulated E&P. And when I say chronological order, I mean that if like there was one distribution that occurred on January 1st, and then another one that was a few weeks later on January 30th, we'd first apply the accumulated E&P to the first distribution. Okay, so the earliest one that took place during the year. First come, first served. Okay, so let's do this with an example. I don't think it'd be too bad once we do an example. So we've got Ella. So she's the sole shareholder of Vegan Soda Corporation. Ooh, vegan soda. Doesn't that sound appetizing? Okay, so let's say that she sold her stock, okay, to Sophia, to somebody else. So basically, Ella owned all the shares of Vegan Soda Corporation, and now she's selling all the shares on October 15th. Okay, so she's going to sell her shares for $600,000. And then I've got a little more info here to spice this up. So let's say that Ella's basis at the beginning of the year was $250,000. Okay, we're going to do that. We're going to calculate a capital gain on her sale. I'm going to do the distributions and stuff too, but I just really want a nice meaty problem here for you. So now we've got the corporation's accumulated E&P, okay, was $100,000, and then the current E&P for the year is $80,000. So that's the E&P. We got accumulated of 100, current of 80. Okay. Now, we've got two distributions that happened during the period. Okay, we got distribution number 1 right here. So the corporation gave $180,000 to Ella on June 30th. Okay, so June 30th, Ella got $180,000, and the question is, how is that going to be treated? How much of this $180,000 is going to be a dividend? Then we have a second distribution, which occurs after Ella has sold the stock. Remember, Ella sells the stock on October 15th, and Sophia buys it. And so then Sophia is going to get the next distribution because she's the only shareholder, right? At first, Ella was the only shareholder. She sold everything to Sophia. Now Sophia is the only shareholder. So on December 31st, later that year, the corporation is going to give $60,000 to Sophia. Okay, so now we got everything we need to figure out basically how these distributions are treated. Okay, we got $240,000 in total distributions. We note that is higher than the current E&P, $80,000. So we are going to need to do our allocation process. So we'll start with Ella. Okay, we'll start with Ella. And so I got this formula here, which I showed you before, and now here we're going to plug in numbers. Okay, so the current E&P for the year is $80,000. Okay, that's just given in the information. So we're going to take the $80,000, and we're trying to say how much of this do we allocate to Ella's distribution. Well, how much was Ella's distribution? The amount of the distribution was $180,000. Okay, and that again is from the given information. And then the total distributions is $240,000. That is Ella's distribution plus Sophia's distribution. Add them together, 240,000. So basically, a way of thinking about it is this 180 divided by 240,000, that's 75%. So you're basically saying, look, there was $240,000 of distributions during the year, and 75% of them went to Ella. So we're going to take 75% of the current E&P and allocate that to that distribution. So $60,000, this is the amount of current E&P that we're going to treat when we're figuring how much of Ella's distribution is going to be a dividend. Okay, so now let's take a look. So she's got 180,000 was her distribution. 160,000 is going to be a dividend. How did I get that number? Well, we've got 60,000 is current E&P. That is what we got when we did this formula. We said 60,000 of the 80,000 in current E&P that this company had, 60,000, 75% of it is going to apply to Ella's distribution. Okay, so that 60,000 is going to be a dividend. But then we go in chronological order. We go back to next the accumulated E&P. Okay, when I say chronological order, I mean that the distribution was made to Ella first on June 30th. So we haven't dealt with Sophia's distribution yet. We'll get to it, but we're dealing with the one on June 30th. Okay, that's the one that occurred first. So first we said, well, look, 60 of the 80,000 of the current E&P has to do with this distribution. So it was 180,000. So 60,000 of it is going to be a dividend because of current E&P. Then we look back to the accumulated E&P. Okay, and we saw that the company had $100,000 of accumulated E&P that was in the given information. So now we have exhausted all of so her share, her allocable share of the current E&P and all of the accumulated E&P. Notice that we do not allocate the accumulated E&P. Again, it's just first come, first serve. So 60,000 plus 100,000 means 160,000 of the $180,000 distribution that Ella received will be taxed as a dividend to her. Okay, so she's got a $160,000 dividend, but it was a $180,000 distribution. So what happens to the extra $20,000? It is going to reduce her stock basis. Okay, and we said that her stock basis, if we go back to giving her, it was initially $250,000, and then now it's going to get reduced by $20,000. So it's going to become $230,000, and she sells the stock for $600,000. So $600,000 minus $230,000 is going to be her capital gain. So she's going to have a capital gain. This is on the sale of the stock. Okay, that's going to be $370,000. So Ella's tax consequences: she's got $160,000 dividend. The $20,000 remaining amount of the distribution that is not a dividend reduces her stock basis. And then so when she sells the stock, she has a capital gain of $370,000. Now, let's take a look at Sophia. Sophia's next, and we're going to again apply this formula. Okay, this is the same formula I showed you before. The current E&P, again, it will be $80,000. Okay, but now instead of before we had 180 divided by 240. Okay, for Ella, for Sophia it's different. We got 60 divided by 240. So basically 25%. So 25% of the distributions that occurred during the year had to do with Sophia. So Sophia is going to get 25% of the current E&P, which is $20,000. Okay, so $20,000 of current E&P when we are looking at her distribution and the extent to which it is a dividend. Okay, so here we go. She received a $60,000 distribution. Now we said current E&P, we will treat it as $20,000. That's her allocable share of current E&P. So $20,000, that current E&P, that's going to be a dividend. But accumulated E&P has already been exhausted. It's already been exhausted because the whole 100 was used with Ella. So there's none left for Sophia. So Sophia is just going to have a $20,000 dividend. Okay, it's just her allocable share of the current E&P, but her distribution exceeds that, right? It exceeds that. It's higher than $20,000. So what happens to the remaining $40,000? It is going to reduce Sophia's stock basis. So now we can calculate Sophia's new basis in the stock. So she paid $600,000 for the stock, but now because of this distribution, 40 of the 60 is treated as a reduction in her basis. So her basis in the stock will be $600,000 minus $40,000, which is $560,000.